Bitcoin is worth over $1 million. Sounds crazy? Maybe not. In this video, we're diving into why that idea might not only be realistic, but inevitable. And no, this isn't hype. It's math, history, and a shift in global value systems. Let's break it down. Gold has been money for thousands of years. It's scarce, durable, recognized across borders. But gold has a problem. It's stuck in the analog world. Now enter Bitcoin. It's programmable, decentralized, borderless, and just like gold, there's only a limited supply. 21 million coins. Ever. That's why more and more investors, hedge funds, and even countries are calling Bitcoin digital gold. But here's the kicker. Bitcoin's market cap today is still just a fraction of gold's. Gold's total market cap is estimated at $13 to $14 trillion, Takari. Now imagine if Bitcoin took just 25% of gold's market share. That would imply a Bitcoin market cap of about $3.5 trillion. Divide that by Bitcoin's supply, 21 million coins, and you get over $165,000 per Bitcoin. And remember, that's just 25% of gold. But here's where it gets wild. What if Bitcoin not only matches gold, but surpasses it? Bitcoin is easier to store, to move, to verify. It's not just digital gold, it's programmable value. That's why some analysts, including institutional giants, see a future where Bitcoin's market cap hits $15 trillion or more. At that point, we're talking $700,000 to over $1 million per coin. So how fast could this play out? Consider the backdrop. Central banks printing at historic levels. Inflation worries aren't going away. Trust in fiat currencies is eroding. Add to that the halving cycle. Bitcoin's supply issuance gets cut every 4 years. Historically, prices explode 12 to 18 months after each halving. The last halving was in 2024. That makes late 2025 to 2026 a key window.
200 to 250,000 for Bitcoin still makes sense because that would still only value it at 25% of the size of the gold market.
Okay.
So I think digital gold means Bitcoin should be worth over $1 million per Bitcoin, and it could happen in the next few years. But maybe pricing 25% of that, especially with Genius Act, makes sense.
If institutional demand ramps up, think pension funds, sovereign wealth funds, and central banks, there won't be enough Bitcoin to go around. Suddenly, $1 million doesn't sound that far-fetched. Now here's a thought. What if the smartest move is not to chase the $1 million dream just yet? Bitcoin hits 25% of gold's market cap in the next few years. That puts it around $175,000 per coin, a quarter of gold's value, but way more portable, liquid, and decentralized. If that's where we land, even then, Bitcoin would be massively undervalued compared to its utility. So maybe pricing in just 25% of gold and acting on that thesis today is the genius move. Not waiting for the $1 million party, but getting in while others are still doubting. This isn't just a price prediction, it's about a shift in how value is stored and moved in the 21st century. Bitcoin is doing to money what the internet did to information. It's not perfect. It's not risk-free, but it's inevitable that a decentralized, digital store of value will play a huge role in the future economy. And if that's true, then $1 million Bitcoin isn't a moonshot, it might be conservative. AI's breakout moment. Suddenly, the world paid attention. In crypto, that moment is happening right now. And it's not about Bitcoin or NFTs, it's about stablecoins. Major banks are jumping in, consumers are adopting fast, and behind the scenes, stablecoins are fueling what could become a $4 trillion shift in global finance. In this video, we're breaking down why stablecoins are crypto's ChatGPT moment, who's getting in, and the smartest way to invest in the trend. But stablecoins, they're actually solving real problems. Right now, businesses use them for 24/7 settlement. Consumers in unstable economies use them to protect savings. Traders use them to move billions across borders instantly. They're dollar-denominated, fast, cheap, global. And here's the kicker. They're growing while the rest of crypto cools off. This isn't speculation, it's infrastructure. It's digital dollars going global.
JP Morgan has already processed over $1 billion a day through its internal stablecoin, JPM Coin, eased. Citi is piloting digital token settlement for trade finance. PayPal launched its own stablecoin in 2023. Bodega is testing USDC on-chain for global payments. Why? Because they know something big is happening. This isn't a trend, it's a global shift in how money moves. Circle is behind USDC, one of the most trusted stablecoins. They're pushing hard into global markets, they're audited, and they're IPO ready. Yes, this is a strong company, but it's not public yet. When it is, it could be a monster. Most stablecoins don't run on Bitcoin. They run on Ethereum. Over $100 billion in stablecoins exist, and a huge percentage live on Ethereum. In fact, over 30% of Ethereum's network fees come directly from stablecoin activity. Every USDC or USDT transaction, that's ETH getting burned. Ethereum is literally the toll booth for the stablecoin economy.
Since stablecoins are the ChatGPT moment for crypto because businesses like it and consumers are adopting it, and now we see JP Morgan and Citi and getting into the stablecoin market, and the Genius Act, of course.
How would you play that?
Well, Circle is one way because it is, a standout company. They've done really well. But Ethereum is really the way to play stablecoins because the majority of stablecoins are created on Ethereum. It's over 30% of its network fees. And if Scott Bessent's right in it, he says now it's close to a $4 trillion market. That's exponential growth for Ethereum.
According to macro investor Scott Bessent, the stablecoin market could hit $4 trillion. That's 10x growth from where we are today. And guess who benefits the most from that exponential rise? Not just Circle, not just banks, it's Ethereum. The more stablecoins move, the more ETH is used. The more ETH is burned, the scarcer it becomes, and that's powerful for long-term holders. ETH isn't just a crypto asset anymore, it's becoming the core settlement layer for global value. Zoom out, we're witnessing the birth of programmable dollars. Stablecoins are already being used. Milliseconds for payroll in Latin America, Bitcoin for remittances in Africa, medias for trading, lending, and gaming in Asia. This isn't a niche market anymore. It's finance, reinvented. And just like ChatGPT made AI real to the world, stablecoins are making crypto useful. That's the moment we're in. It's still early, but the curve is steep. Stablecoins are exploding. Institutions are validating it. Consumers are adopting it. You want exposure? But more importantly, don't sleep on Ethereum, because when the world runs on digital dollars, Ethereum might just be the rails beneath it all. Don't forget to like, subscribe, and drop a comment below. Are stablecoins the real use case crypto needed, or just a stepping stone? Thanks for watching, and stay curious.